This is Horizons Middle East and Africa, our top stories this morning. Chip cut. Nvidia and AMD agree to pay 15% of their revenues from Chinese AI chip sales to the US government in return for export licenses. And territory at stake. Ukraine's President Volodymyr Zelensky says Kyiv won't cede territory to end its war with Russia, as President Donald Trump prepares to meet Vladimir Putin later this week. And Israeli Prime Minister Benjamin Netanyahu defends his plan for a military sweep of Gaza, calling it the best available option. We'll speak to Control Risk's Niamh McBurney on what this means for Israel's war with Hamas. It's just gone 8 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Shamana Basechi. Welcome to the programme. Happy Monday, everybody. And it's geopolitics that is really dominating the narrative this morning. Sentiment buoyed by the hopes of what will come out of that meeting between Trump and Putin on Friday in terms of potential peace for Ukraine. So you can see the green across the screen this morning in terms of the futures picture. Japan is on holiday, but you're already seeing stocks powering ahead in the Asia session. And if we flip the board over to the cross-asset picture, we have US CPI coming out tomorrow. No trade in cash treasuries because of the Japanese holiday, but euro dollar at a 116 handle. And you can see oil and gold slipping, again, coming back to the geopolitics on the hopes of a deal for Ukraine. Well, it isn't just the geopolitics, though, that's top of mind this morning. We also got to talk about trade, as always. Bloomberg having learned that Nvidia and AMD have agreed to pay the US government 15% of their revenue from Chinese chip sales as part of a deal to secure export licenses. We could bring in now our China correspondent, Min Lo. And Min, just talk us through how Beijing has responded to this.
Yeah, Beijing hasn't yet responded to this, and given that this is a cut of the revenue from U.S. tech companies, it is possible that China is not going to respond to this. Although, of course, it raises the question of whether President Trump is prepared to trade off these security risks when it comes to chips in exchange for more revenue. Will President Trump, for example, consider rolling back further chip curbs on some of the other more advanced chips in exchange for a revenue cut from U.S. tech companies? That certainly will be something that China would be very happy about. We know from previous reporting that China had been pushing for the U.S. to roll back some of these advanced chips curb that will be very critical for China's AI development. But interestingly, if you look at the market reaction so far in terms of the Nvidia suppliers here in Asia, we are seeing them trading pretty mixed today, even though this is supposed to be positive for AI infrastructure spending in China. You look at Samsung, for example, down about 1% or so. Some are saying that because this is a surprise and erosion of profits from Nvidia and AMD, that profit erosion is likely to be squeezed from the upstream suppliers like TSMC and Samsung or SK Hynix as well.
OK, really interesting. But as you allude to, if such concessions are possible, to what extent does this undermine the idea that tariffs are being used to defend US national security? How does it affect other US trade negotiations?
Yeah, of course, right now, when it comes to the U.S.-China trade negotiation, the deadline for that truce is tomorrow. And we know it's been a tussle between rare earths in exchange for more chips. But you remember some time back when U.S. rolled back the chip ban on H20 chips to China, it was seen as largely a concession to China. But in recent weeks, though, we have seen Chinese state media putting out reports of the security risks associated with NVIDIA's H20 chips. This is after U.S. administration officials have been calling for the installation of these location tracking capabilities in these chips to ensure that they don't end up in the wrong hands. So right now, it is not clear if China will still see any concessions on the chips front as something that is positive for the country. The state-linked media on a social media post today, you can see here, really put out a statement saying that all countries need to be cognizant of this risk and need to build up their own capabilities and supply chain when it comes to software and hardware to counter what it sees as AI hegemony from the U.S. And we have Trump earlier today posting on Truth Social. He's hoping to see China quadruple its soybean purchases from the U.S. That still continues to be another point of contention between the two sides.
All right, Min, we thank you for the update. We'll check in back with you later in the programme, but for now, we thank you, Bloomberg's Min Lo. Now, speaking of national security, the NATO Secretary-General Mark Rutte says that this week's US-Russia summit may open the door to negotiations about Ukrainian territory.
I think it is important that the meeting takes place next Friday. President Trump broke the deadlock with Putin in February. That was very important. He was the one delivering the big success at the NATO summit, the 5% spending commitment in June, one of the biggest foreign policy successes of the US in the last couple of years. And of course, only a couple of weeks ago, he decided to, again, open the floodgates of lethal support into Ukraine and to put secondary sanctions on countries like India. So he clearly is putting pressure on Putin. Next Friday will be important because it will be about testing Putin, how serious he is on bringing this terrible war to an end.
Meanwhile, sources say that EU nations are seeking to talk to President Trump before his meeting on Friday with Vladimir Putin. For more, let's bring in Bloomberg's Tony Halpin, who's been across all of this for us. Morning, Tony. You've just heard from Mark Rutte there, but we've also heard from Kaja Kallas, the EU's foreign policy chief, saying that international law is clear. All temporarily occupied territories belong to Ukraine. What are we going to see on Friday? How likely is it that Zelensky is going to be presented with a deal that forces him to hand territory over to Russia?
Yes, good morning. I think this is the great fear in Europe and in Kiev. President Trump has been talking in terms already of land swaps. Putin and Trump are going to meet in Alaska, which is about as far as you can get from Ukraine and Europe. And the fear in the capitals in Europe is that they're going to carve out a deal which will agree to hand over essentially a large part of Ukrainian territory to Vladimir Putin. And the risk is that they have very few levers to influence President Trump at this point. Europe is not going to be at the table. There's still some arguments about whether President Zelensky is going to be invited to Alaska. And so they're left somewhat clutching at straws, talking about international recognition and principles of temporarily occupied Ukrainian land. But essentially, possession is 9/10 of the law, as we know. And if Putin has possession of this territory and Trump is willing to leave him in possession of that territory, it's very difficult to see how Ukraine's going to push back.
Well, of course, you had European leaders trying to get involved with this, hosting the US Vice President J.D. Vance in the UK over the weekend. But, if Trump puts Zelensky in a deal or no deal scenario, Tony, and Zelensky chooses no deal, can Europe make up for the lost US support militarily?
Well, they've had 3.5 years to get ready for this, and there's no great sign, in fact, that they've made good use of this time. They are still very heavily reliant on the US for weapons sales. If you remember, President Trump said he wasn't willing any longer to give weapons to Ukraine, but he was willing to sell them to Europeans to provide weapons to Ukraine. And some of the comments from Vice President Vance over the weekend even put somewhat of a question mark over that. So essentially, the Europeans are left with a difficult task of trying to put a brave face on whatever deal comes out of Friday's summit, and it's very difficult to see how they'll be able to step in and replace US weapons sales. Simply in some instances they just don't have those types of weapons, and in others they don't have the necessary quantities, and so they're going to be left with a very difficult position of saying that they support Ukraine, but in physical military terms not really being able to step up to the plate.
OK, Tony, we thank you so much for the update. Tony Halpin out of Dubai with the latest on those talks ahead of Friday. Well, just checking in on oil, we have seen declines for WTI and Brent futures on this speculation that the Alaska summit is going to raise the chances of ending the war in Ukraine, boost crude supply if those sanctions on Russian flows end, and potentially exacerbating that glut that's forecast for later this year. So you can see Brent here slipping back towards $66 a barrel. It dropped over 4% last week, its biggest weekly drop since June. Oil down more than 10% this year as, of course, OPEC Plus brings production back faster than planned. But still ahead on horizons, hear why Ionic Asset Management says that there are pockets of opportunity in global equities as President Trump's reciprocal tariffs take effect. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the US Treasury Secretary Scott Bessent has told Japan's Nikkei News that the US expects to largely complete trade negotiations by the end of October. For more on the market impact, we're joined, I'm pleased to say, by Ankita Pathak, who is fund manager and global equities and macro strategist at Ionic Asset Management. Good morning to you, Ankita. Thanks for making time for us. If this is the case, are we going to see less volatility in the rest of the year?
Always a pleasure, Lizzie, to be here. But I do not think that volatility will die on, because we've seen the tariff events pan out. There has been a perpetual delay as to when this will end, right? So this was supposed to end August 1, but now this is extended up to October. So I think markets will continue to worry, which will result in volatility. But I think the good side of this is that the TACO trade has become immensely popular now. So markets are also shrugging off some of the impact and are rather focused on more important things at this point, which in my opinion is earnings. I think it has become a very, very earnings-driven market as we speak today.
So you think that this bullishness that we're seeing, where stocks just keep jumping from record to record in the US, is actually rational?
As long as the earnings continue, yes. We are in the middle of the earnings seasons. We've had about 5 of the Mag 7 release their results. They were all EPS beats that we've seen. There was a street worry that the capex of these companies will drop, but the results don't show that. The results show that the capex has continued to increase. In spaces like digital ad, Meta, where we have some of the bigger names in the industry, have done extremely well. So as far as tech sector is concerned, consumption is concerned, I think there has been some beat across earnings this season. And I think that will continue to keep the market buoyant, at least in the short term. There will be volatility, 100%, but the market reaction to earnings show that it has become a very bottom-up market now.
But of course, there's this embrace of the disruption that AI is causing. But is there not a flip side to that? That there are industries and companies that are going to be on the receiving end of that disruption, and that's a bad thing?
Well, if I were to take an economist view to that, probably yes. But if I were to take a capitalist view to that, I would say that creates fresh pockets of opportunities. There will be companies that the world has not invested in before, which will now become even more relevant. So we've seen the whole history of the top 7 or top 10 companies in US getting to where they are today. But today, as we speak, in the enabler space, so not just the front-end AI companies, but the companies who do, part of a semiconductor value chain or some part in cloud, some part in cybersecurity, are becoming increasingly important. And there will be these pockets of opportunity. So I think over time, there will be this sector rotation that we will see as investors ourselves, where we move out from more conventional industries to more AI enabling industries, I would say. And market cap in theory is supposed to reflect the nature of the economy, and I think slowly and gradually we're getting to that point.
Okay, really interesting. We also, of course, get US CPI this week. We've got a new member of the Federal Reserve coming in the form of Stephen Myron to replace Adriana Kugler. How soon do you expect Fed cuts?
Sure. I think tomorrow's release consensus expectation would probably be closer to 2.7%, which is same on the YOY levels that we clocked in July. Now, this inflation is not extremely high. It is some uptick from 2% target that Fed was aiming to be at, but it's not abnormally high. One. Second, the inflation of tariffs is only visible in goods. So services part of the economy is not reflecting any inflation yet. All in all combined, there is a September rate cut that I would want to leave on the table. We have seen some dissent in the last MPC of the Federal Committee as well. And I think September, a 25 basis rate cut remains on the table.
OK. Ankita Pathak, Fund Manager and Global Equities and Macro Strategist at Ionic Asset Management. Always a pleasure to have you with me on the programme. We thank you so much. Well, coming up next, Israeli Prime Minister Benjamin Netanyahu is defending his plan for a military takeover of Gaza. And we're going to speak to Control Risks next about what this means for Israel's war with Hamas. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, and it's just coming up to 5:20 a.m. here. Now, the Israeli Prime Minister Benjamin Netanyahu has defended his plan for a military sweep against Hamas strongholds in Gaza. The plan has drawn condemnation from foreign powers as well as vocal opposition at home. But Netanyahu says that it's the best available option for recovering hostages while safeguarding his country's long-term security.
Our goal is not to occupy Gaza. Our goal is to free Gaza, free it from Hamas terrorists. The war can end tomorrow if Gaza, or rather if Hamas, lays down its arms and releases all the remaining hostages.
Joining us now for analysis is Niamh McBurney, Associate Director at Control Risks. Morning, Niamh. You heard Netanyahu there. Realistically, can Israel defeat Hamas?
As Netanyahu has defined the conflict currently, no. I mean, it's very clear to us over the last 18 months that Hamas has been able to create a new wave of people that support it and fighters that it can use to combat Israeli Defense Forces activity in the Gaza Strip. So even if the government does go ahead with its proposed expansion of the conflict to include a full reoccupation of the Gaza Strip, they're not going to be able to defeat the group militarily in the way that he has defined it, although there has been some flexibility in his definition to make sure that the definition always suits his own political needs, which is impacting domestic politics in Israel.
Well, on that, is Netanyahu's primary motive in continuing the war the return of the hostages?
It's our assessment that it isn't. It's our assessment that he broadly is looking to use the conflict to secure his own political survival. And that is primarily in order also to avoid being held accountable for the corruption charges, the trial that is underway and that has been paused as a result of the conflict. But he's also coming under increasing pressure from the full spectrum of, politicians and civil society groups in Israel, which means he's now decided to go ahead with this reoccupation strategy, again, partly as a delaying tactic.
And we've all seen the devastating images of starving Gazans, Niamh. What's your understanding of why food isn't reaching them?
It is a political decision by the government to reduce and up until relatively recently prevent the flow of humanitarian aid as a means of putting pressure on both Gazans themselves, but also on Hamas, with the hope that if, it was presumed that the only reason that aid wasn't getting in was because Hamas was not willing to negotiate with Israel, that therefore Gazans would turn against Hamas. But this broadly is not the case. And we've seen Hamas come to the table, willing to consider several new proposals that have been put to the group and to Israel over the last several months. But they're never quite to the preference of the Israeli government, and so it has been a tendency that the Israeli government tends to reject those proposals, and it leaves us where we are.
Can any world leader other than President Trump influence Benjamin Netanyahu at this point?
No. President Trump is the most and the only influential person to be able to shape Netanyahu's thinking on this. It's because of their quite complicated relationship and ultimately, Prime Minister Netanyahu's considerable support base and kind of respect for America that is a main influencing factor here, and also his respect for President Trump. So President Trump does have an opportunity here, and it appears that there is some movement by his administration to encourage the Israeli government to be able to increase aid flows into Gaza. But ultimately, the two are aligned on trying to find an end to the war that means the end of Hamas as a political and militant force. And which is why the conflict continues.
Well, so what happens to Gaza afterwards? Netanyahu says that Israel will hand it back to Arab forces. What does that look like in reality?
So since the conflict began back on the 7th of October, there have been several ideas put forward by different groups, both within the region and outside of the region, some of them led by governments within the region, to put forward an idea that there would be a collective, Arab government-supported effort to rule the Gaza Strip. A couple of those were that they would be Palestinian leaders, political leaders, and then they would have neighbouring countries' military forces overseeing security. But I suspect this is just another kind of delaying tactic, as it were, to be able to pretend to the international community that Israel is doing this kind of almost with the awareness and acceptance of its neighbours, of its Arab neighbours. But that's not the case, and it's been some time since we've seen considerable willingness from neighbouring states, such as the Gulf states and Jordan, to actually, be dragged into this bit because they have their own reputational concerns at home and abroad as well.
Just finally, Niamh, Iran says that it isn't going to allow nuclear site inspections when the International Atomic Energy Agency visits later today. Do you see any hope of improving relations with the US, Europe and Iran?
So when it comes to the relationship between the IAEA and Iran, there is potential there for that relationship specifically to improve, because Iran can use it as a means of delaying accountability for the nuclear program and as part of the diplomatic negotiations that are going on in the UN regarding sanctions snapback and all of the regulations around that. But when it comes to the core of the political relationships between Iran, the E3 and the US, particularly when it comes to Iran and the US, we've seen a great deal of stubbornness from both sides. I think ultimately we're going to need to see more cohesion within Iran politically and its security forces militarily, that it feels less vulnerable than it has because of the June war, before it actually comes back to the table, which is probably a couple of months away, to be honest.
OK, Niamh, we thank you so much for your analysis. Niamh McBurney, Associate Director at Control Risks. Great to have you with me on the programme. Next up, we'll go to our Middle East Money segment. That's next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Chip cut. Nvidia and AMD agree to pay 15% of their revenues from Chinese AI chip sales to the US government in return for export licenses. Territory at stake. Ukraine's President Volodymyr Zelensky says that Kyiv won't cede territory to end its war with Russia, as President Donald Trump prepares to meet Vladimir Putin later this week. And lithium stocks on the rise after CATL says that it suspended production at a major mine in China for at least 3 months, spurring hopes of wider output curbs. It's just gone 8:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Verdon in for Shemana Basechi. Welcome to the programme. Happy Monday. Monday if you're just joining us. And it seems that the hopes of a deal on Ukraine at the end of the week is continuing to buoy sentiment on both sides of the Atlantic this morning. Futures higher, and already in the Asia session, we're up to 0.3% on the MSCI Asia Pacific Index. We have to keep Japan out of the picture because, of course, it is a holiday there, so we have no trade in cash treasuries. But if you flip the board over to the cross-asset picture, we have euro-dollar braced for this US CPI print tomorrow. 116 is where we are right now. We've got weakness continuing, though, when it comes to oil and gold, because, again, it comes back to the geopolitics, these hopes that potentially there could be a deal on Ukraine out of that Alaska summit on Friday. But let's get a proper check on how markets are faring in Asia. Min Lo is on standby for us in Hong Kong. Min.
Yes, it's a big week for Asian markets this week because we have a lot of earnings coming out. The big tech heavyweights like Alibaba, JD.com are reporting this week. Tencent as well. Here you can see Asia ex-Japan up about 0.3% as we await not just the key inflation data out of the US, but key economic data out of China later in the week as well. But over the weekend, we already had inflation data from China showing CPI, Consumer Price Index, at 0% flat and was actually better than expected. The expectation was a decline of 0.1%, but Producers' Price Index had been declining for a 34th straight month, really showing a long road to reflation of prices in China. But we're seeing the CSI 300 up about 0.5% today. Flip the board, take a look at some of the sectors we're watching. We're watching lithium prices very closely today because CATL, the Chinese battery maker, had announced that it is halting production at a key lithium mine, a very important one that contributes to about 3% of globally mined lithium. That's seen as supportive for lithium prices. We are seeing double-digit increases across these lithium miners in China and in Australia as well. Now, the firm CATL still in talks with the government to renew its permit to mine in that area, but it could take a few months. And for now, we are seeing that support coming through on lithium prices.
All right, Min Lo, we thank you with that update out of Hong Kong. And later in the programme, we will dive into that CATL story. But first, to the Middle East, where a growing number of job candidates are asking sovereign wealth funds in the region to offer them carried interest awards, which is, of course, a type of performance-based paid tied to investment gains. Now, the new approach marks a real shift from their traditional reliance on high salaries and lifestyle perks. And for more, we can dive into this with Bloomberg's Money and Power reporter, Alex Dula. Morning, Alex. Just walk us through what this kind of compensation actually is.
Thanks, Lizzie. So carried interest is a form of compensation which allows the employee to sort of get compensated for the returns on their investments. So typically you would see it in private equity companies, largely based in London or New York, but it's been quite difficult to implement it in sovereign wealth funds because they don't typically raise third-party capital. But we are starting to see it creep into some of the newer sort of sovereign-linked entities in Abu Dhabi, and also in the sovereign wealth funds themselves. They don't call it carry, but there's a form of carry where compensation is tied to investment performance.
So which firms are we talking about here?
Mubadala Capital and Lunate both now offer carry, and then also Mubadala Investment Company, which is the sort of sovereign wealth fund part of the entity, offers compensation tied to investment performance. So we're definitely seeing it creep in, and I think it will be a lot more important as Abu Dhabi starts to attract or wants to attract some of the world's brightest and best talent. Carry is really going to be an essential part of that pay structure. All
right. Alex Dula, Bloomberg's Money and Power reporter, we thank you for setting the scene for us. And let's get more now from an expert in this space. Oscar Orellana-Hyder is co-founder of Dubai-based recruitment firm Cordell Partners, and I'm pleased to say Oscar joins us now. Oscar, let's just say that I'm hot talent in private equity. I'm in London, but I'm thinking about moving over to the Middle East. How competitive is the market for talent like me right now?
Yeah, morning, Lizzie. Thank you so much for having me, by the way. I really appreciate your time. It's really competitive. And I think a lot of these managers, whether you're, as Alex rightly said, whether you're a sovereign entity or whether you're a private manager, whether you're a newly established fund in the region, I think you have to be relatively flexible and agile and nimble with your structures of pay and long-term incentives. I think also there's definitely a cost of living occurring across Abu Dhabi and Dubai. So housing is increasing, schooling is increasing. So it's at least a vast sort of percentage increase on the basic ways of living. So they have to accommodate that and increase a part of their packages. And it's a really good way to lock people in naturally, 3 years, 5 years. Sometimes we see 8 years carry structures with the big chunky deals with our friends from the US. So it's a really good long-term incentive plan that is not immediate and keeps them locked in.
So who's getting that benefit? What sort of positions in a firm?
Yeah, so Alex rightly alluded to the Abu Dhabi sovereign government entities. Historically, I've been in the region 10 years. Cordell Partners has been going just 2 years in September. Historically, over the last 10 years, it has been at senior director level. So that's anyone with, at the upper end of 8, 10 years, 12 years experience. These people have executed on 100 million plus deals previously for other sovereign or government entities like Canadian pension pots or Australian superannuation funds. However, that has changed and that is changing. We have seen that there are managers in the region that are now offering carry or carried interest way more broadly to the wider firm now. The analysts, the associates, the more junior members of the team, and also non-investment hires as well, which has not really happened historically.
And is it much different in a family office to a sovereign wealth fund?
It can be. It can be. The region's family offices are weird and wonderful, as I'm sure you're aware. It's very case-by-case basis. The family offices, by their very nature, are proprietary. So there would potentially be other different structures of incentive as opposed to giving away big chunks of cash. But it is slowly but surely creeping in some more established, more developed family offices in the region. Yes, of course.
So you kind of nodded to how comp in the Middle East has evolved over the years. What other benefits should I be asking for if I'm thinking about moving there, apart from the base and the bonus?
Yeah, it's a really good question. Thank you. Again, historically, 10 years ago, it was you should definitely go in expecting some form of housing allowance. And that can be up to, well, again, not to put exact numbers on it, please don't quote me. But it used to be 400, 500,000 dirham a year for your housing allowance. There's definitely an education allowance up to, in government entities, up to 3 children, 4 children, up until they're 18, about 35 to 65,000 dirham per child. And those are the main ones. There are many other smaller factors as well involved, but they're getting more elaborative. They're including welfare allowances, wellness allowances, gyms, social clubs for women, reading, self-development allowances. They are, as your article and Alex rightly said, way more akin to US and developed market styles of packages.
So you're selling it to me, Oscar. Are they actually managing to keep talent in the region? And how much inter-firm poaching is going on?
Yeah, thank you. That's another really good one. So through COVID, we actually, believe it or not, we didn't do too much recruitment. We did an awful lot of retention planning. So we worked a lot with the multinationals and the families and local entities on retaining their people. And it is tricky. I'm not going to, it's a young country, it's a young sector. A shiny new thing comes along and it's difficult to keep your people. Hence why they're looking at the long term. They're no longer building for 5, 10. They want to build the next 50 years of their country. So if they can retain these directors, lock them in for 5 to 8 years with other structures in place, with other retention tools in place, not just for them, by the way. So the Middle East is incredibly, as you know, family orientated. They think about the trailing spouse is what they call it potentially, whether that's a husband or a wife. They think about the children. They are getting way more elaborative in their thinking for education for children as well, of course.
So amidst all of that, if I'm looking at the market, who's going to offer the best when it comes to carry?
Yeah, it's it could be a $1 million+ question. You've got to look at the sovereign entities as a start. Why? And I look at many other points. I think most active in the region. You look at Alex mentioned Mubadala, parts of Mubadala Capital, Mubadala investment vehicles are very attractive in terms of the counterparts that they're dealing with. They will be dealing with the best fund managers in the world. Hence why I would assume down the line that they would be wanting to offer the most carry. And something that I haven't mentioned is that a lot of these managers, I think you guys put out that the hedge funds as well are increasing their fees away from the traditional 2 and 20, that they're increasing their fees in order to allocate to their own people, to retain their own people. So it's a blend of the two. It's the government-backed sovereign entities as well as this new wave of hedge funds or alternative investment managers. Those would be my two immediate stabs in the dark for you, Lizzie.
All right, Oscar, thank you so much for laying out the landscape for us. Oscar Orellana-Hyder, co-founder of Cordell Partners. Good to see you. Well, for more of these stories looking into the intersection of wealth and power in the region, do sign up to our Mideast Money newsletter on Bloomberg.com. You can get plenty more of Alex Doula's reporting there. But let's also just stay in the region, bring you the latest out of Lebanon, because it is under pressure from the US and Gulf nations to completely disarm Hezbollah, with the US willing to serve as an intermediary if that happens. Gulf nations have told Lebanon that funds for reconstruction depend on a plan to fully disarm the group. They're also demanding that Lebanon restructures its banking sector and cracks down on corruption. Hezbollah's leader, Niamh McBurney, says that the group will not engage on disarmament under pressure from the US or from certain Arab countries. Well, coming up on the programme, lithium stocks and prices jump as Chinese battery giant CATL halts production at a major mine. We're going to bring you all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Verdon in London. Now, Bloomberg has learned that Chinese battery giant CATL has suspended production at a major lithium mine in China for at least 3 months. Now, sources say that it's announced the halt internally after failing to extend a key mining permit that expired on Saturday. And for more details now, we're joined by Bloomberg's Danny Lee. Morning, Danny. Just talk us through the scale of this overcapacity issue in the lithium industry, first of all.
Yeah, we'll get to the kind of market reaction and the sector reaction at the moment. But no, indeed, CATL, the world's biggest maker of electric vehicle batteries, it confirmed this Bloomberg scoop over the weekend. It confirmed this Bloomberg scoop this morning in Asia hours, and indeed that it will be suspending operations at this mine temporarily for 3 months. But this really is coming about at a time when lithium prices are pretty depressed. They have been for quite some time now. And, when you look at the impact of this mining closure for lithium, Bank of America says this mine could account for around 6% alone of global lithium output. And there are other mines in the region that could account for around roughly 5%. So it's pretty significant. And you see the effect it's having on the marketplace, particularly for spot lithium prices in China. And potentially this impact could really help turn around the doldrums that lithium prices have been facing for quite some time. Now, in particular, when you look at some of the kind of industry reaction, we've seen the likes of some of the Tianqi lithium, for example, up 90%. We've seen Ganfeng lithium, another rival to CATL, up 21% today. So we've seen a lot of movement in kind of share prices in the lithium price as well. So, yeah, there's a lot to digest, particularly for the market reaction and for traders.
Well, do we have actual details of how this suspension came about, Danny?
Well, no, market watchers had been looking very closely at this CATL operation in China, and particularly, and as you said at the top, the fact that there was an expiry that was going to take place on the mining license by August 9th. In the days leading up to this suspension, market watchers were trying to fly drones over this mine just to see the kind of activity, what was going on. So it was inevitable that there was going to be some kind of reaction to this decision, and indeed the fact that there has been a temporary halt imposed. But CATL does want to actually restart operations, but I don't think they would mind right now the way in which the kind of fallout or the reaction the industry has had, given where prices are right now, and given the kind of depression we've seen in spot lithium prices, which kind of links to just this kind of depression in the demand for EVs overall around the world.
Danny, you talk about how lithium prices and stocks have surged. We have a Bloomberg intelligence report this morning saying that a price jump might actually reduce the incentive for Chinese producers to cut output. Are we likely to see wider output curbs, do you think?
Well, it's fascinating, really, because when you look at the likes of CATL and other major mining players in China, they've taken bigger control of various commodities such as lithium to have a bigger say or a bigger sway in pricing. So, in many ways, it could be possible that they could temporarily down tools at some of these mines in order to see some of the pricing being put back into the marketplace and to see more of a higher price. Equally, it's in the politics of all of this, you do see the fact that Beijing has been trying to turn around this deflationary pressure, this glut, which has been damaging its industry competitiveness. So at the end of the day, there are moves being made at industry and a political level, and I don't think too many people will be minding what has happened today at CATL and over the weekend.
All right, Bloomberg's Danny Levy, thank you so much for tying all those threads together for us. Danny Lee there. Now, for a look at some of the other stories we're following this morning, the Wall Street Journal says that the Intel CEO, Lip-Bu Tan, is set to visit the White House today after President Trump called for his removal over ties to Chinese businesses. The report cites sources saying that Tan hopes to show his commitment to the US and propose ways that the government and Intel could work together. Trump posted on social media last week that Tan should resign immediately over alleged conflicts of interest. Elsewhere, Palantir Technologies is now the most expensive stock in the S&P 500, forcing bullish investors to bank on increasingly robust future growth to justify its price. The stock has soared about 2,500% since 2021 and closed at a fresh high on Friday. The stock now trades at 245 times forward earnings. Palantir has been boosted by growing AI use, its business ties to the US government, as well as those stellar earnings. Well, those are some of your top stories. Up next, we're going to get you more on the so-called anti-involution campaign and what it's designed to achieve. That's next. This is Bloomberg. Back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Beijing's drive against excessive competition may be key in easing deflationary pressures. China correspondent Min Lo has more here on the so-called anti-involution campaign and what exactly it's designed to achieve.
It's vouchers galore on China's food delivery platforms, intense promotions leaving customers spoiled for choice, milk tea going practically free.
I drank 4 to 5 cups of milk tea in a day. The vouchers for first-time buyers are too good. It's a waste not to use them. But I overused them and drank until I ended up in the hospital.
The race to the bottom has become a national obsession and a policy problem. In July, China's Politburo vowed to curb what it calls irrational price competition, the directive coming right from the very top, President Xi himself calling for an end to involution, or 内卷 in Chinese, literally meaning rolling inwards, a phenomenon where vicious competition leads to diminishing returns. It was used back in 2020 to describe mindless workplace competition. Now it's permeating sectors from electric vehicles to e-commerce. In June, officials summoned the heads of BYD and other major EV makers, warning them to self-regulate after BYD launched a new price war with discounts as steep as 34%. In July, food delivery giants were summoned after JD.com started a price war with its entry into a space once dominated by Meituan and Ele.me. The anti-involution campaign comes as cutthroat competition has squeezed industrial profits. Factory deflation has lasted 34 months, while the consumer price index hovers around zero. The need to reflate the economy and expand domestic consumption increasingly urgent under the threat of more tariffs. But China has done this before. A decade ago, capacity cuts in steel and coal sectors helped end a 54-month stretch of factory deflation. But this time, the job is much harder. The most severe price wars are dominated by private firms.
Managing private companies to stop them from over-competing against each other is a much more tough job and much different task compared to control SOEs to cut capacity.
Anti-involution will not work in the next probably 4 to 8 months, but over time, the capital market will pick up the positive sentiment, and in a year or two, the real economy will respond. So I'm fairly positive over the impact of this in the long run.
As China charts its priorities for the next 5 years in the upcoming October plenum, Xi faces a challenge: how to coax CEOs to cut production, consumers to accept higher prices, and local officials not to compete for new investments crowding into the same sectors. Analysts say any supply-side reforms will likely be gradual to avoid job losses and painful repercussions for the economy. Min Lo, Bloomberg News, Hong Kong.
So that reporting from Min Lo. Of course, we saw the Chinese inflation data over the weekend. CPI holding steady in July, factory deflation persisting though. And Chinese equities now higher, about 0.5% on the CSI 300, lifting the broader Asia session. Japan of holiday, of course. But that does it for Horizons Middle East and Africa. Stay with us for Daybreak Europe. Tom McKenzie takes it from here. This is Bloomberg.